All right, good evening, everyone. So thank you for joining in this webinar. My name is Wilson from Syfe Advisory Team, and I'll be the moderator for today's session. So joining us today, here will be Ritesh, Head of Investment Advisory from Scythe, and Ross, Community and Educational Lead at Luno. So for today's topic, we can see that we'll be touching on how crypto will play a long-term role in wealth generation. So let's go. Ross, you'll be starting first.
Hi, testing, mic check. Hi, Wilson, can you hear me?
Yes, all good.
Hi, Wilson, fantastic. Is my audio clear? Can you just let me know?
Yep, fantastic.
All right. I'm not sure if you can hear. There's some unfortunate drilling going on in somewhere in the office area. Is it bothering a lot, the drilling sound, or can you hear my voice clearly?
I think we can hear you. All right.
Can you hear clearly? Okay,
yes.
Fantastic. It's just one of those unfortunate, just as you're about to do presentation, suddenly, they start doing drilling. So no worries. Let me just get my slides ready. So I'm just going to share my slides with everybody here. Okay. I will stop your screen sharing and I'm going to continue sharing my screen. Yeah, Wilson?
All right, go ahead.
Okay, fantastic. Okay. All right. Can you see my slides, Wilson? Just confirm for me that you can see them clearly.
Yep.
Okay, fantastic. Good evening, everybody. Hi and welcome. My name is Ross. I'm from Luno, and I'm going to be telling you guys whether or not crypto plays a role in long-term wealth generation. Okay, so I know many of people are always, they're always asking a lot of questions, especially about my hair, because my hair is the biggest thing on the screen, right? It takes up about 3/4 of the screen. Yes, I can confirm my hair is as real as Bitcoin. So today you'll find out more about that. So my role at Luno is the community and education lead. I'm here to educate more and more people about crypto, to help you understand crypto better, so that as an investor, you can make better decisions, right, when it comes to spending your money on investments. So today we're going to be covering this topic, and I really want to say a big thank you to Scythe for inviting me, because I'm always so excited to speak about this topic. Before we go any further, I would like to ask a question, and please go ahead and put it in the chat. Yeah, how many of you here, right, there are about 97, almost 100 people here, how many of you have ever bought Bitcoin before? You can just put yes or no in the comments. Okay, I just want to get an idea, just survey the room. How many of you have ever bought Bitcoin before? Put yes or no. What do you guys think? Right, you can put in the comment section so I can see and all that, right? Yeah, let's see. Okay, many yeses. So some of you are putting the Q&A. There's actually the comments as well. So I see yeses. Danny is putting yes. Some other people are putting yes. Nora put yes. Alex put yes. Fantastic. Thank you so much. So quite a number of you have already invested in Bitcoin. Today's talk will be a nice refresher and also to help you get some better insights into what Bitcoin is. But if any of you have never bought Bitcoin before, then you really want to pay close attention, because today I'm going to be explaining what Bitcoin is and why it has value. All right, fantastic. Let's move on. Before we go into the meat of my talk today, I just want to make something very clear. I'm not giving you financial advice, right? My job here is as an educator from Luno. I'm not here to tell you whether to buy, whether to sell. So whether I talk about Bitcoin or any crypto, it's not about financial advice. It's just for educational purposes. I want to help you guys understand. If you need financial advice, please consult a licensed financial advisor. All right. Now, today's talk is going to touch on my personal story, the evolution of money, debunking the 3 biggest myths about Bitcoin, how Bitcoin is seen as an asset, how to get exposure to Bitcoin, and very important, some investment strategies that you may be interested in. I'm sure many of you here are all experienced investors. We'll definitely be covering some Q&As at the end of today's session. Feel free to ask questions in the Zoom. Later on, our moderator, our MC, will compile the questions for me to answer. Now, let me start with my story. I love starting with a story because people can relate to my story. I'm sure many of you can as well. You see, in the year 2017, that was when I discovered Bitcoin. But I thought Bitcoin was a scam. I thought it had no money. This is what I wrote on Facebook. I said, Bitcoin is likely to crash. I didn't believe in Bitcoin. Why did I say this? Why did I think it was a scam? It's because I said I've read online regarding Bitcoin, but the articles are all very complex, very complicated, and I can't wrap my head around the concept entirely. So that was my weakness. I read about Bitcoin, I didn't understand it, so I disregarded it. I said, no, Bitcoin is a fraud, is a scam. No value, no money. How wrong was I? 4 years later, today, I'm working at one of the biggest crypto exchanges in the world, and I'm educating people about Bitcoin. So what changed? What changed my mind? How did I go from skeptic to believer to educator? Well, hopefully in my presentation tonight, you too will find some insight. Now, in order to talk about Bitcoin and crypto, we have to look into the past. We need to understand how did we get to where we are today. And it all started with the first medium of exchange, the barter trade, right? My grandmother, she was from Malacca. She was a Portuguese settlement lady, and she wasn't very rich, right? She came from a village, a kampong in Malacca, and she used barter trade to survive. She would grow vegetables in her garden, beautiful vegetable. She'd go to the market and exchange barter trade with the chicken seller uncle. She would get real, true story, you know, she would tell me as I was growing up. And I was like, wow, barter trade, very successful, but not very efficient, right? Yes, it started off currency and exchange, but we then evolved our currency to become better and better, more effective, more efficient. So we discovered things like precious metals, gold, silver. These things are precious because they're scarce. You can't find gold everywhere, right? You can't find gold in my hair. The only thing in my hair is a comb, right? Comb is very precious to me, but not gold, not gold. So gold is very precious, silver very precious. We created a system of currency based on these precious metals, but metals are very heavy. We evolved again. We come up with a better system, paper money, right? Or sometimes known as fiat currency. Now, before 1971, right? $1 for each fiat, $1 is equal to a small amount of gold in the world, right? So each dollar is equal to some gold. But after 1971, this was abolished by President Nixon. Now money, the value of money fluctuates and depends on the government, political stability, and economic factors. Now we wanted to improve, right? Evolution didn't stop there. We evolved even further. From paper money, we got plastic money, credit cards, right? Which we use regularly every day, just pay, wave, and go. But we wanted to evolve some more. We went one step even further. Now, e-wallets. You don't even need to carry cash. You don't need to carry a card. You just carry your phone with you, and you can pay for practically anything these days, right? So many e-wallets available. Now, my question to you as the audience, what do you think comes next in the evolution of money? You see, at Luno, we believe that cryptocurrencies are the next step in our evolution. That's our belief. You may share it, you may argue with me about it, you can have a debate with me about it, but that's where we see the trend and the market moving towards. Now, then we come to this question, what is Bitcoin? What is Bitcoin? The simplest definition that I can give about Bitcoin is that it's a digital, decentralized currency. That's how I define it when I explain it to others. And if this is your first time defining Bitcoin, then please use this as a template to explain it to your friends, because many people are talking about it, but not many people understand it. So let me clarify. First, let's look at the word digital. This is a simple word. I think most of us understand digital, right? You take a picture of something on your phone. The object is, let's say I got a water bottle, right? I take a picture of this water bottle. The water bottle is physical. The picture is digital, right? It's something that's online. It's something that's pixelated, zeros and ones, program code and all that, right? So Bitcoin is the first fully digital type of currency, right? All currency that we have always has a physical component. You might look digital, but you can go to the ATM and take out physical cash, right? Bitcoin is the first fully digitally created currency, right? Now, before we go to decentralized, let's talk about currency. Currency basically refers to any medium of exchange, right? Whether it was barter or gold coins or money, Bitcoin was initially created to be a form of currency, right? A peer-to-peer form of currency between you and me. However, I must make this note. However, over the years, the narrative behind Bitcoin has shifted. See, when it was first created, it was created to be currency, right? To replace fiat currency. But now it has shifted into more of an asset and an investment. And towards the end of the slides, I'll be explaining more about that. The second word in the middle, this is the most important. If you forget everything else, but you understand decentralization, you have understood the whole philosophy behind crypto, right? Decentralization is the main word today. What does it mean? It simply means when power is not concentrated in one individual, right? It's when the power is split up amongst everybody who participates in the network. Let me give you a simple example, and you can use this amongst your friends as well. Here are two pictures, right? On the left and on the right. On the left, we've got centralized, right? This is a game of Monopoly. On the right, we've got decentralized, which is a game of chess. Let me explain why. In the game of Monopoly, there's one banker, right? Let's assume the father is the banker. He controls all the money, the flow in, flow out, the rental, the payment, the salary. Everything is centralized because one banker controls it all. This is similar to our traditional finance, right? Your monetary, your MAS, your Federal Reserve, Malaysian banks, whatever, Bank Negara Malaysia. All of these are central authorities, right? So in a centralized system, one person or company or group, they control the system of finance, right? And that's what we live in today. Bitcoin is a decentralized system. So think of this example in chess. If you've ever seen this wonderful film on Netflix called Queen's Gambit, amazing show. Chess is very boring, but they made it so exciting, right? if you notice, can you see what I'm highlighting here? What are they doing, these chess players? Besides playing, they're also writing something down on paper. They are actually writing down each other's moves, right? They're writing all the moves in the game so that if someone tries to cheat, they can reconstruct the entire game from their record. And that's what decentralization is all about. There is no referee in the middle. Notice there is no banker. You can play chess with anyone from anywhere in the world without someone in the middle watching and controlling, because all the players are watching each other. He's watching her, she's watching him. And that's how Bitcoin works. It was meant to be a peer-to-peer network. No banks, no government. Let's just do it within ourselves. And so that's what Bitcoin was originally created for, a peer-to-peer network for people to transact with each other. So if you ever forget, just remember, monopoly, centralized, chess is like decentralized, just as an analogy. Let's move on. Crypto as an emerging asset class. Now, all of you here are investors. You all are here to invest in assets, right? So if you think about crypto, crypto is like an emerging asset class, right? So if you look at here, crypto, the Bitcoin market is about 700 billion. You go a little bit further, the whole market of cryptocurrency is about 2 trillion USD. You go a little bit further to gold. Wow, 11 trillion. That's really, really big. And then finally go to the global stock market. How much is that? 75 trillion US dollars. It's a number that your brain cannot even fit sometimes into your head, right? Where is Bitcoin? Bitcoin is here. What can we conclude from this graph? As an asset class, cryptocurrencies have much more room to grow, right? Global stock market has been around for 500, more than that. I think almost 1,000 years, people have been trading some form of stocks, right? But Bitcoin has only been around for about 13, 14 years. Hasn't been around for very long. In fact, by human terms, it's like a teenager, right? So it has a long way to go and a lot of room to grow, right? And the issue sometimes that happens here is that because it's such a small asset, we see a lot of price volatility, which I will be talking about in later slides. Now, I want to quickly cover what are the 3 biggest misconceptions about Bitcoin. Now, as an educator, I come across hundreds and hundreds of people during my sessions, and I would say these are the 3 biggest misconceptions. And if you have more, feel free to ask them in the chat later on. Bitcoin is a get-rich-quick scam. Wow, everybody says this to me. Say, hey, Ross, Bitcoin is a scam lah. You know, got no value one. You just buy it so you can get rich quick. Well, let me give you an insight that I believe about Bitcoin. I don't think Bitcoin is a scam anymore. I used to think so, but I changed my mind when I understood the intrinsic value of Bitcoin. That's how you know something is a scam or not a scam. You see, most scams, they don't actually have a proper product or they don't have something that's meaningful. They just talk a lot, but actually got nothing. There's no product, there's no real technology. Bitcoin, on the other hand, is based on an actual product, an actual piece of technology, which is very new, which is decentralized. So here are 3 ways that you can think about Bitcoin, right? Here are 3 ways that I believe Bitcoin has intrinsic value. Firstly, let's look at this picture. What is that? It's a piece of gold, right? Bitcoin is actually quite similar to gold, believe it or not. Gold is what? Limited. That's what makes it scarce, right? You can't find gold everywhere. If everybody had gold in their houses today, gold value would plummet because then it has no more value. Everybody got a piece of it. But gold is very hard to obtain. It's very rare and it's very scarce. That's what gives it value. Guess what? Bitcoin is also very scarce. In fact, I know there are some people who own Bitcoin here. Can I ask in the comments? You guys can comment in the chat. What is the maximum number of Bitcoins that will ever exist in the world? Who knows the answer? You can go and comment in the chat. Yeah, what is the maximum number of Bitcoins that will ever be created? Okay, Zan, very fast. 21 million. Well done, Zan. Yeah, you're absolutely correct. There are only going to be 21 million Bitcoins ever created. Okay, quite a few people. Danny also put 21M. Very good. Thank you, Zan. Thank you, Danny. That's right. And so what does that mean? That means Bitcoin is scarce. Therefore, similar to gold, it has a certain level of value, right? Because there's a very limited amount of it and people are constantly demanding for it. Besides that, gold is also divisible, right? People don't take a gold bar and go and buy McDonald's, right? We don't use gold bars these days, right? We use currency, right? You got 50 Sing dollar, you can break it up into smaller pieces, smaller amount, $100, you can put 50, or whatever it is, right? So as long as you can divide it, you can use it more frequently in day-to-day usage, right? And you can do the same with Bitcoin. People don't buy 1 Bitcoin, right? Sometimes people think, I must buy 1 Bitcoin. No, you can buy 0.00000 up to 8 decimal places. Therefore, it is more useful to be used in day-to-day usage, right? Besides that, Bitcoin is actually very useful for overseas remittance. What does this mean? Have you ever tried transferring money from Singapore overseas? Let's say, for example, let's say you want to transfer money from Singapore to US. How many days does it usually take? How many days? Just give me a wild guess. If you've had experience doing this, how many days does it usually take to transfer money outside of the country? Yo Jiawei says 3 to 5 working days. Very good. You're absolutely right. That's actually the answer I had in my head, 3 to 5 days, right? And it has to be business days. They don't work on weekends. Did you know if you use Luno, you can transfer Bitcoin from one Luno wallet to another Luno wallet instantly and for free? Believe it or not, it's true. Bitcoin and cryptocurrencies have opened a whole new realm of overseas remittance that can be easier, faster, and much cheaper, right? And so that gives Bitcoin intrinsic value. Last but not the least, Bitcoin is very similar, to the internet, right? Why do I say that? Just like the internet cannot be controlled by a single individual, and it's also accessible to all, Bitcoin is a very similar way. Bitcoin cannot be controlled by 1%, 2%, 3%. It is controlled by everyone who participates in the network. Remember the chess example? I'm watching you, you're watching me. That's how the Bitcoin network works. Everybody keeps each other accountable. And as long as you have an internet connection, you can access Bitcoin from anywhere in the world. That's what gives it intrinsic value. So just remember these three things: similar to gold, overseas remittance, and also similar to the internet. Those are the three things that I believe have that give Bitcoin its value. All right. Someone mentioned Bitcoin whales, right? Danny said Bitcoin whales ? For those of you unfamiliar, the word whales refers to someone who has a lot of money, millions and millions of dollars. Yes, whales may influence the price of the market, but whales do not control Bitcoin, right? Bitcoin is a decentralized technology based on something known as the blockchain. All right, but we'll address questions later. Another reason why I would say Bitcoin is not considered a scam is because Bitcoin has actually died 440 times. Did you know that? Right? There's this website online called 99 Bitcoins, where you see all these red flags down here. Every time someone in the news claims that Bitcoin is dead or has no value, people can go and record it here in time as a historical record for how many times Bitcoin has died and resurrected. In 2011, in Australia, people said Bitcoin is dying, whatever, at $10. In 2016, in Yahoo, they printed Bitcoin is dead, says prominent fintech executive, wow, at $437. In 2017, someone said Bitcoin is useless at 14,000. And in 2021, just last year, the fundamental value of Bitcoin is 0, just last year. Now, notice that no matter how much bad news comes across in Bitcoin, it still survives till today, like a phoenix rising from the ashes every time. In fact, what's really interesting, if you look at the early years of Bitcoin, notice how concentrated all these red dots are. You can barely see in between them, right? But as the price goes up, suddenly, like got a lot of white space in between. Why? I believe it's because people are slowly beginning to understand that, you know what, Bitcoin isn't a scam. It's here to stay and it does have intrinsic value. And the more that people understand it, the better it is for all of us. Okay, another big thing that people often tell, hey, Rosa, Bitcoin is not real, right? It's just digital, right? I can just copy and paste, right? So this is a very common misconception, because if something is digital, therefore it's not real. Because often people tell me, hey, boy, you know, this one is real. I can see it, I can touch it, I can hold it. It's real. Bitcoin not real. I cannot touch one. I cannot see one. So I'm like, no, you have to change the way that we think, especially because we are evolving into a progressively more digital society. So let me give you some very simple examples that all of you are familiar with, right? Last time we used to use CD-ROMs, right? You all remember using CDs? How many songs can you put on one CD? About 19, 20 songs maximum. Today, our life is far more digital. We use Spotify. 2 million, 3 million is nothing. You can get millions of songs at the tips of your fingers from your phone app using Spotify. Those days, to find the news, you have to open the big newspaper, big physical newspaper. Yes, physical, you can hold it. But now we can get news digitally from any corner of the world. We can get it on our phones. Those days, our form of currency that we are all familiar with is paper money, coins, physical currency we can see and touch. But today, I would like to challenge you to also agree with me that as our world becomes more and more digital, right? Our entertainment, our transactions, everything that we do in the world becomes more digital. Shouldn't our currency also become more digital as well, right? So that's a question I leave with you. A third and final statement that I often get is, hey, Rosa, Bitcoin, illegal, right? Just last week, I can tell you true story. Someone told me, hey, Rosa, Bitcoin is illegal. Don't invest, not safe one. I'm like, no, Bitcoin is not illegal, at least not in where I'm from. But you guys are mostly in Singapore, right? Is cryptocurrency legal in Singapore? Yes or no? What do you guys think? The answer is yes, cryptocurrencies are legal in Singapore, but with certain provisions in mind. So for those of you who are familiar, there is something known as the Payment Services Act, right, by the Monetary Authority of Singapore, MAS. They have a regulatory framework that regulates cryptocurrencies, and they actually call it a digital payment token. But don't get confused. We usually refer to it as crypto, Bitcoin, all that. In the MAS Act, they call it a digital payment token, right? Nonetheless, there is a regulatory framework. Now, ask yourself this question. Why would the Monetary Authority of Singapore waste its time trying to regulate a scam? They wouldn't, right? They wouldn't do that. Why would they regulate something that's illegal? They want to regulate it because they recognize that Bitcoin does have intrinsic value, and they want consumers to be able to use it in a safe and regulated manner. In fact, I also want to add one more important point. Just because it's regulated doesn't mean it's legal tender. So you cannot use Bitcoin as an official means to settle financial obligations. In simple English, if you go to McDonald's today, you can't use Bitcoin and pay, right? Unless McDonald's wants to accept. Now, there are some restaurants that do. There's this picture here of Ducatus Cafe. They accept crypto. In fact, there's one shopping mall, the Funan Digital Mall, right? There's a kopitiam inside the food court. They also accept crypto as payments. Now, that's actually quite interesting. It's quite surprising. And it shows business owners who are willing to push the needle a little bit further and accept crypto. Not many people do, but some people can, right? And if you want to, that's your prerogative. It's your responsibility. However, if something goes wrong, don't come crying to the government, because the government has already said it's not legal tender. That does not mean illegal, right? It is legal, especially if you want to buy, if you want to sell, and if you want to trade. And personally, I will advise all of you to please use a regulated institution, right? Go to the MAS website, go and find out what are the regulated institutions in Singapore that you can use safely when it comes to buying, selling, or trading cryptocurrencies. Now, I've talked a lot about Bitcoin. I've talked a lot about its value. I've talked a little bit about regulation. You guys are investors. You want to know, why is Bitcoin an asset, right? What makes it so special as an asset class? Well, let me share a little bit more in depth. If you look at this chart shows institutional investors who are buying into Bitcoin, right? There are companies here like MicroStrategy, Tesla, Galaxy Digital, Voyager Square. These are not small companies, guys. These are multi-million, if not multi-billion-dollar companies. And they are pumping their balance sheets with Bitcoin, literally pumping it. Every time the price drops, MicroStrategy goes and buys some more Bitcoin. Why? 5 years ago, they were not doing this. 10 years ago, nobody was even touching Bitcoin. What has changed? Remember, I said the narrative is changing. Those days, a lot of people thought Bitcoin was a scam. Today, companies have done their research, they're looking into it, and they recognize that there is some value in it. Right now, I'm not saying, I'll make a very clear disclaimer. I am not saying you should go and sell your house, sell your kidney, and put $1 million in Bitcoin. No, that's not what I'm saying. I am, however, saying this. Institutional investors are taking a lot of pain and a lot of research that they're doing into Bitcoin and cryptocurrencies. Maybe it's time that we also make a similar effort to understand this new asset class, right? This is a fun one. Okay, this is very fun. I used to think that Bitcoin was a scam, but I'm a nobody, right? I just put on my Facebook, on my blogs and all that. Let me look at some of the three biggest financial institutions, right? Morgan Stanley. Bitcoin's real value could be zero. Morgan Stanley analyst says in 2017. JP Morgan said, the CEO said, Bitcoin is a fraud that will eventually blow up. Goldman Sachs said 5 reasons why Bitcoin is not an asset class, nor a suitable investment. Right? These are the big boys. They're not nobodies, right? They say people follow. What do you think they have changed in their narrative today? Right? Believe it or not, let's see. This is all really taken from the headlines. Morgan Stanley last time said zero, right? Now is the first big US bank to offer its wealthy clients access to Bitcoin funds. Change already. 180 degrees swift change. Wow. CEO from JP Morgan, now JP Morgan says could make Bitcoin 1% of your portfolios. Goldman Sachs said it's not asset class. Now it suddenly restarts the cryptocurrency desk. What's going on, man? But as I've been saying from the beginning of my presentation until now, the more that people research and understand something, the more willing they are to invest in it, because they understand what they're investing in. Previously in 2017, people just looked at the hype. They looked at the price go up, everybody's talking about it. They looked at the hype. Now people are really looking at the asset and understanding its intrinsic value. And even these big boys have all changed. They didn't apologize. They didn't say, oh, sorry, we made a mistake. They just say, okay, now everybody wants Bitcoin. Okay, let's offer some Bitcoin services as well. Now, I'm sure those of you who invest in Syfe, I'm sure many of you here are Syfe investors as well. You probably have heard of this term, satellite investment. So what is a good satellite investment, right? A satellite investment is something that has outperforming potential, right? As an investor, you don't want to put your money in like, all the small, 1%, 2% interest rate, kind of fixed deposit and all that. What's the point, right? You won't even beat inflation rates, right? It's a lot better as an investor if you look out for opportunities to earn higher rewards, to outperform the market, right? To get more returns. That's what we as investors want to do. Now, in those cases, you do have to take a higher risk to reward ratio. And Bitcoin does have a higher risk ratio, but also a higher reward ratio. And I'll show you the evidence of that later on. Low correlation is also important. Now, what does that word mean? Correlation. For those of you who are unfamiliar, correlation simply means when two variables share a relationship. Simple example. Let's say it's very hot in Singapore. Singapore, very hot. More Singaporeans will drink water. So one variable changes, the other variable also follow, it will change, right? So a good satellite investment is one that has low correlation, meaning that if the rest of the market drops, this investment won't drop as much. It will still be affected, but not as heavily affected as the others, right? And this is just basically based on the golden age of wisdom and advice, which is don't put all your eggs in one basket, right? If the basket drop, all your eggs crack. In the same way as an investor, if you want to be a responsible investor, it's important to diversify your basket so that it has some assets which are low correlation with each other, right? Lastly, you have to be opportunistic. As an investor, as I showed you earlier, right, JP Morgan, Goldman Sachs, their narrative has changed. This is the current narrative. Are you going to take an opportunity to invest in these new market trends that are emerging with regards to crypto, with regards to Bitcoin? And some people say short to medium focus, but actually when it comes to crypto, I would advise people to take a long-term focus. I believe it's not just a trend. I believe it is the next step in the evolution of currency. Now, here are the evidence of low correlation. Yeah, this is a table, as I said, correlation is when two things share a relationship. So if you look at this table, there's the S&P 500, US bonds, Bitcoin, gold, real estate, oil, and emerging market currencies. If you look at the Bitcoin column, the numbers are very small here. What does that mean? That means, let's say the S&P 500 crashes. Boom, S&P crash. What will happen to Bitcoin? Will Bitcoin get affected? Yes, to a certain extent. It will definitely pull Bitcoin prices down because the whole financial system is interconnected, but it won't be as massively as affected as compared to the others, right? If you look at S&P here on the first column, all the red color ones means that if S&P drops, real estate, oil, and emerging market currencies will all drop a lot harder than Bitcoin, right? So that's why Bitcoin and crypto fulfill this role of being a very good satellite investment to diversify your portfolio of assets. Lastly, of course, you can see Bitcoin has outperformed every major asset class in 2021. Outperformed by a mile. Look at Bitcoin. Bitcoin has beaten energy, real estate, financials, technology, consumer goods, materials, healthcare. It's beaten everything. It's beaten gold. Gold has a negative return in 2021. Bitcoin beat gold. I used to have gold and I sold all of it, and that's why, actually, that's one of the reasons why people call Bitcoin as digital gold, right? They call it digital gold. As I mentioned earlier, Bitcoin has some characteristics similar to gold. But if you look at this chart and you look at this, and you can see that Bitcoin has a low correlation, I'm actually quite happy. You know why? Because it means Bitcoin is slowly decoupling itself away from other asset classes. It's decoupling itself away from gold. So the price of gold all doesn't affect Bitcoin. The price of S&P and all that doesn't affect Bitcoin. Bitcoin seems to be decoupling itself and existing as a satellite investment. Now, I'm not saying it's a perfect satellite investment. There are risks and rewards. So that's why I put in this slide, very important, because volatility cannot be avoided, right? Let me make this very clear. Can you make money from Bitcoin? Of course you can. You can make money from almost any asset. Can you lose money from Bitcoin? Yes. You'll find many people out there who don't tell you about the losses, but I think it's important that we are transparent. It's important as an investor, you balance the risk and reward ratio. So there's this guy, Marcus Keong, right? I follow him on Instagram. He used to stay and work in Singapore for some time, and he's very transparent about his crypto holdings, right? He will always publish, every month, how much a percentage interest and how much is earned, how much is lost. In November last year, 11% on Bitcoin up, 22% on Ethereum up. But in December, very transparent, he said, yeah, he lost market. The market dropped a little bit. Ethereum also dropped a little bit, right? It changed from one month to another month. But what does he say? He says, when in doubt, zoom out on the price chart. You remember just now a few slides earlier, I showed you guys the death of Bitcoin, right? How many times Bitcoin has died? Every time someone say Bitcoin died, Bitcoin price go up, 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 up. So when in doubt, zoom out, take the long-term view, right? Take the long-term view, especially I would say 10 years and above. Also, as an investor, understandably, you might be concerned, oh my gosh, so much volatility. 1 month can make money, the other month lose. What should I do? Very simple. There are strategies to hedge against this. So how my friend does it, he allocates only 10% of his total investments in crypto. And by doing that, it's a little bit more conservative, but it's fine. Because let's say the market drops by 30%, right? What happens? He only risks about 2 to 3% of his whole thing, right? All right. So last but not the least, I'm just going to wrap up with last two slides, right? How you can get exposure to Bitcoin, right? You can start with platforms, which are especially regulated ones. So please go to your country regulators and find out what's regulated there. Here's just some examples like Luno, CoinHako, Crypto, and Independent Reserve. That's the easiest place to buy, sell, and trade crypto on a regulated platform. If you don't want to hold crypto on your own, you can actually go and purchase Bitcoin ETFs. In fact, Scythe is going to be offering some Bitcoin ETFs on their Scythe trade, which is launching soon. So please go and check out ETFs if you're an investor that doesn't want to hold actual Bitcoin, you just want to invest in ETFs, that's perfectly fine. You can also do Bitcoin mining, but I will say that this is rather expensive. You need very specialized equipment. So try to avoid this unless you really have the technical expertise for it, right? Last but not the least, what can you use Bitcoin for? Well, most people are in the middle here. They use it for investment as a form of diversifying your portfolio. I think I mentioned this quite a few times. You can use Bitcoin for privacy. You can use it for trading. But personally, I would recommend for most beginners to start with diversifying your diversifying your portfolio. And you can do that through many ways. DCA, staking, lump sum, active trading, right? The riskiest here is active trading. The most easy one is DCA, which simply means putting a small amount of money consistently over the long period of time. And DCA has been shown to outperform all people in the market, right? DCA really has the evidence to show that if you just invest slowly and consistently over a long period of time, you will usually just beat most people in the market. In fact, Luno has a DCA function that you can buy as low as RM1 every day. In fact, if you wanted to buy. Staking is where you put your crypto somewhere and you earn a little bit of interest. Luno also offers this. Many other crypto platforms also offer this as well, right? So find a strategy that works for you. Last but not the least, I'll end with this. I can't talk about crypto without cybersecurity because it's really important that you remain safe. There have been a lot of scams going out recently, you know, OTP scams, bank scams, and all that. Please keep yourself safe. Most importantly, for all of you listening, whatever platform you are using, social media, banking, whatever, please activate a 2FA and do not trust any random links that come in. You must activate two-factor authentication because it gives you an extra layer of security when it comes to your cryptocurrency, right? So please do that. It's always important that you remain safe online. All right. At the end of the day, why should you care about crypto, right? I'm going to end with this story. This is my last slide for today. Remember the story I told you about my grandmother? My grandmother grew up with this kind of phone in Malacca, right? Kampung in Malacca. This is the phone that she knows how to use. She don't know how to use handphone. One day, my mother said, hey, Amma, can you bring the handphone? My grandmother went and bought the aircon remote. Then my mother laughed. She said, Ross, go and bring my handphone. Grandma doesn't know. I laugh at my grandmother. I made fun of her because she doesn't know what a smartphone is. She thought it's an aircon remote. But now when I look back, I feel quite sad because my grandmother never evolved with the technology of her time. She never developed the skills of how to use the technology available to video call me, you know, to send pictures to me, to say hi to me on the phone. She never knew how to do that. And so my question to all of you in the audience listening, you've heard me talk so much about Bitcoin and the evolution of technology and finance. Are you ready to take the next step in upgrading your finance together? Okay, we've talked about Bitcoin as an asset. We've talked about how it defies the odds in the market and its properties as a satellite investment. At the end of the day, the decision is yours. Thank you so much, ladies and gentlemen. I pass the time back to our wonderful MC Wilson from Scythe to handle the questions for today. I'll be happy to take as many questions as we have with the time that we have left. Thank you so much for your time. I really enjoyed presenting it.
All right, thank you, Ross. I think we can actually head straight to Ritesh's presentation first. We'll leave all the questions at the last. All right.
Sure.
Great. Hey, Ross, that was really great presenting about cryptocurrencies, digital assets, and the platform as well. Given conscious about time, so maybe we'll just quickly cover a little bit about Syfe as well as just kind of educate folks a little bit more in terms of how should they look at their overall wealth as well, right? Like, and does cryptocurrency, like, where does it fit in, and what are the different things that they should consider while they try to take exposure to it. All right, so let's look at Syfe, right? So Syfe, we are a MS licensed digital wealth management platform based in Singapore, and we are building the next generation of financial solutions for individuals across Asia. Our endeavor is to make and democratize investments for everyone. And to that extent, we have been working tirelessly to bring more and more digital first solutions for investors across the board. Now, in terms of the licensing itself, as I said earlier, we are a retail fund management license holder. It's called CMS license. As part of the license, we are required to make sure that all client assets are kept completely separate from our own assets and have to follow very stringent requirements from MAS in terms of how clients' assets and all are managed. And to that extent, essentially, all client assets, they are held in trust and custody. So the trust account resides with DBS, and the custody through Saxo remains at HSBC and Citibank as well. And how that helps is, again, because these are totally held separate from our own assets, what that means is, in the unfortunate event, like something happens to us as a company, don't think that will happen, but your assets are fully protected because essentially these are kept completely separate from our own corporate accounts. Now, in terms of our journey so far, we launched in 2019. We have grown from strength to strength, leading to be one of the most prominent personal finance apps in Singapore and beyond. We have recently been awarded the Best Digital Advisory Solution by DigFin. We have customers across 42 different countries. And now we are at a size where nearly half of our new customers are basically referrals from our existing users. So sort of demonstrating that people are liking our platform. They understand the platform, how to go about using it, and how that can be helpful in building their long-term wealth as well. We are also funded by very strategic investors. Till date, we have raised more than 52 million USD in total funding, and has been the most prominent of that investor base is Valar Ventures, which is basically venture capital arm, tier 1 venture capital arm backed by Peter Thiel, who is a founder of PayPal. Now, quickly diving right into the meat of today's presentation, essentially Ross covered cryptocurrencies and digital assets in the context of satellite investing. But let's take, zoom out a bit and just try to understand what satellite investing mean, and even more broader, like what core and satellite together mean when you're trying to invest on a broader basis. So typically, when you're thinking about investing, you need to have some framework in mind when you go about investing. And typically there are two approaches. One is the passive approach, where typically you will invest into a broad-based market index and you're seeking market returns, right? So if you're investing into, say, S&P 500, and through that, you're getting exposure to the top 500 companies in the US. Similarly, in the more active approach, instead of using a broad-based index to kind of invest and get exposure to the broader market performance, you think that you can actually beat the market and generate an alpha and get a greater return. And the idea is for you to outperform the market. And typically what that means is then you take a more active approach in terms of selecting your own individual securities or trusting a manager, an active fund manager who promises to deliver a better return than traditional indices. Now, again, there are pros and cons to both these investment strategies and approaches. Typically, the passive approach makes sure that essentially your costs are very, very low. You don't have a specific risk attached to a particular manager. You also have all of the things done in a much more efficient manner because these index-related funds, or ETFs, as they are more widely known as, tend to be very well diversified, and overall they're beyond just cost and efficiency. They make sure that they are giving you returns as the market moves ahead as well, right? So typically what happens is, again, the market is smart enough. So in the active approach, there are these managers who are trying to outperform. Now, if you go back in history, there was active approach was given a lot more prominence. Now, slowly what people and research has proven, and even data shows, is that almost 80–90% of active managers actually end up underperforming the benchmark. So if you were to think about it from an overarching standpoint and bring the two things together, you can look at a core and satellite approach to investing, which kind of combines both these approaches, right? Because you might want to do that active approach because you do have a view on the market and you do want to express yourself. But at the same time, what you don't want is to do that at the expense of derailing your long-term investment plans and goals. And that's where I think if you combine the two together, the combination can help you achieve both those aspects in your overall investment strategy. Also, to highlight one part, I think it's very important to look at the left bottom section of the slide, where you see that essentially almost 94% of your long-term returns actually come in because of the overall asset allocation that you're doing, and market timing and security selection is only 6% of your long-term returns. So a core and satellite framework of investing can actually help you combine both of these aspects together, and it focuses a lot more on asset allocation. And that's the reason I think overall, if you have a good understanding of what's your core, what's your satellite, then when you invest, you can go about it in a much more confident manner. Now, in terms of how do you create your satellites, because on the core side, you can just take exposure to some broad level market index tracking instruments and you're good to go. But when it comes to satellites, there are a lot of these alternative securities and investment opportunities that you can take exposure to. So if you are particularly interested in a particular sector, theme, region, country, individual securities, there are always ways for you to get exposure to those via the relevant sort of instruments, right? So if you want single stock exposure, you can do that. If you want a country exposure, you can go country ETFs or country funds as well. Similarly, if you want to take a sector bet, you think inflation is rising and you want to take a specific view on inflation, those can be implemented as well. In the more newer wave of satellite investing, there are hedge funds, there are all these alternative actively managed ETFs. There are, as Ross covered, a whole new asset class kind of emerging with these digital assets, which is the crypto world. So I think the big debate is like, where does crypto fit in? And within the satellites, like how can you think about incorporating cryptocurrencies in your portfolio? Before going into that, I'll quickly highlight the Syfe suite of portfolios because as a digital wealth manager, we are committed to make sure that you are investing in a way such that you are building your long-term wealth. And to that extent, when it comes to core and satellite, we do have strategies through which you can develop your own core portfolio. So, we have ready-made core portfolios available for you. These are globally diversified across asset classes, more of the traditional asset classes, the equities, bond, and gold. And depending on your risk appetite, depending on your investment horizon, you can choose a portfolio with varying levels of equity within them. So from a defensive all the way to equity 100. Similarly, on the satellite side, as I mentioned earlier, satellites could be more sector specific, more country specific, or they can be thematic in nature where you want to participate in some of the biggest mega trends in the world. And those are things that might sort of shape our future. So on the satellite side, we have all these thematic portfolios, be it ESG and clean energy, healthcare innovation, disruptive technology, a more country-specific exposure through China growth, or you just want to generate a long-term global income strategy. So that's always there as well. For more local Singaporean investors, they are always very, very attracted by higher yielding instruments. So REITs as an asset class is highly popular in Singapore because it gives you a combination of high dividend, almost close to 5%. And on top of that, you can get some growth as well. Now, for the more savvy investors, we also have this custom portfolio offering where you can construct your own portfolio. You can say that, okay, guys, these are great, but I would like to, build my own core, or I would like to build my own site. Then we have 100% custom portfolio builder as well. And last but not the least, at this, same time that you want to build your investment portfolios, you might have spare cash and you want to basically enhance the yield on that cash beyond what you get in your bank account. So that's where our cash management solution can come into play, which is basically a combination of money market and short duration bond funds. And it gives a healthy 1.2% return, projected return, which tends to be much, much better than what you're receiving through your bank accounts. So let's move on to the next section. So Vivian, if you could run this poll, I think Ross did go through it a little bit, but let's take a more broader poll in terms of how many of you already own crypto.
This is good. I'm very curious to see the results.
Let's see. Vivian, shall we see the results? right, taking a while. Okay. Wow. So almost 46% of the audience has some crypto exposure. So that's pretty good in terms of what people are thinking about it. It's not just people are thinking about it; they're actually also already invested, or they are planning to, right? Like even that number was pretty high. So Ross, that's a very interesting number.
Yeah.
Another very interesting number. Let's maybe I'll take a comment from you as well, Ross, after this. But
sure.
this will be very interesting to know how much of the percentage of your overall investment portfolio is made up of cryptocurrencies or digital assets. All right. Shall we see the results?
Yeah, this is what I expected as well. Yeah.
Right. So yeah, I think so as well, right? Like, most of the folks have more than less than 5% exposure, but I'm actually surprised that some people actually have more than 50% of their investments into crypto. So, some people are very, very aggressive, and, maybe like they are the early adopters, and they really truly believe in the, future potential of cryptocurrencies as a long-term wealth generator. Okay, great. So how do we think about cryptocurrencies as a satellite portfolio, and how much should you be allocating? I think, Ross, you covered all these aspects pretty well in your side as well, but I just wanted to again come on these in a bit more broader sense as well. Cryptocurrencies as an asset class, it's very, very promising, but at the same time, we have to be cognizant that it's highly, highly volatile. There are certain cryptocurrencies which are known as stable coins and all, which are supposed to be pegged to the US dollar, so they are, not volatile per se, but broadly, the other more prominent cryptocurrencies tend to be pretty volatile. Bitcoin, as Ross was mentioning, it has died many a times. So, and in its death, I think it's also taken a few investors alongside, right? So it's, something that people need to be conscious of. Like, just don't, chase a shiny object just because it's going to the moon. Do some due diligence in terms of, is this something for you, right? Like, if you're generally a risk-averse investor, you should be conscious about the volatility associated with cryptocurrencies, right? If you look at cryptocurrencies in general, compare it to a typical 60-40 kind of a portfolio, you will observe that a cryptocurrency-based portfolio can be as much as 10 to 15 times more volatile than your typical 60-40 portfolio, right? So it's important to understand, and even in a 60-40 portfolio, which is maybe 60% equity, 40% bond, the actual risk contribution from the equities is more like 90%, because when something goes down, when your portfolio goes down, even though equities is only 60%, it can contribute almost 90% of the downward movement, right? So from that perspective, crypto, whether it is 10%, whether it is 5%, when it goes down, it can have a sort of trickle effect in terms of your overall portfolio as well, right? Like, we talked about correlation, right? And Ross, again, you pointed out that cryptocurrencies tend to have low correlation. Now, that was true to a certain extent in the earlier part, years, say through like the 2017s, 18s, and 19s. But as you can see in a more recent environment, the correlation has started to increase a bit. So this is something that people should be conscious about. Even the last couple of weeks has been a bit volatile. The equity markets dropped, the Bitcoin and cryptocurrency market dropped as well. So there is, that aspect that people need to be cognizant of. So even though maybe it's only 10% of your portfolio, but if the broader market is dropping and your crypto, portfolio is dropping even more, then for a risk-averse investor, it can be quite daunting to kind of, absorb. So from that perspective, please be conscious of your risk appetite before you venture into crypto and related digital assets. Have a view of your financial goals, have some basic things in place, have your emergency funds, have, a basic financial planning 101 done before you sort of dabble into these more advanced kind of investment strategies. And have, as we covered earlier, have your core investment portfolios sorted. And then if you're confident, then go into more of these digital assets as well. On top of that, be conscious of your investment time horizon too. Like, what are you using your cryptocurrency allocations for? If you're using it for long-term wealth generation, then, you should learn how to live with the volatility as well, right? Like, as again mentioned, it can have more than 10 times the volatility of typical asset classes. But if you're going to panic, even with a 5%, 10% allocation, then it is not something that will work in the long term for you. But if you can remain invested and can navigate through these ups and downs in a much more smoother manner, that's when I think it can give you some tangible outcomes. And on top of that, I think important to, again, think through, if you're using it as a pure trading kind of speculative side, then that's a completely different conversation as well. But if you're looking at it from a long-term wealth generation standpoint, then be conscious to have a understanding of how much you want to allocate, and then sort of remain committed to it and ride through as well. In terms of vehicles to get exposure to crypto, I think, Ross, you covered a lot from the standpoint of crypto exchanges. So Luno being one of them, through which people can get exposure, direct exposure into cryptocurrencies. You did touch upon a bit in terms of the more traditional sort of finance routes as well, through which you can get cryptocurrency exposure. So there are like ETFs available. Some of them are actually available on Scythe's platform as well. Typically, if you want a direct sort of Bitcoin exposure, there are Bitcoin related ETFs that have been there. So BITO was launched, I think, October of 2021. It's again, not direct Bitcoin. I think it is, futures related. So there are some aspects that you need to, again, be conscious about when you are taking these, exposures. But broadly, if you want exposures to, say, mining companies, or you want exposure to, companies who are using blockchain technology, then there are other ways to get exposure to, those aspects as well, through, ETFs such as the ARKW or the blockchain ETF, which is the BLOK. And these are the two of the investment ETFs that are actually available as part of our Syfe Select custom portfolio. So you can construct your own portfolio and have a kind of a dedicated exposure to, blockchain or crypto, or broad-based indirect exposure to these aspects as well. Of course, you can also take some direct exposure to these via investing into the Bitcoin exchanges themselves, right? Like, there are some individual companies like Coinbase, Robinhood and all, which are actually listed on the stock market. So you can take individual exposure, or you can take exposure through some of these companies like Square, which have started accepting Bitcoin, or they have Bitcoin within their balance sheet and all, right? Like, Tesla, for example, have Bitcoin in their balance sheet. So essentially, there are different ways to get exposure. If you are not that savvy to use the Bitcoin exchanges and all, these are alternative ways for you to get some exposure to crypto. All right, so yeah, I think this one will be an interesting question as well. Like, what crypto assets do people own?
I see you put in a Dogecoin.
Will be interesting to know if people are.
Yeah, I'm curious to see how many people actually, actually hold Dogecoin. That'd be quite cool.
Vivian, shall we?
Okay.
Wow, 26%, yeah. Man. Okay.
Yeah.
But I think, like, again, it is expected to, have Bitcoin and Ethereum sort of figure at the top, because these are the ones which have the highest market cap and has been, the much more adopted kind of cryptocurrencies that we see currently.
Yeah, that's right.
All right. So I think, like, we just covered them earlier as well. So if you want, alternative way to get exposure to cryptocurrencies through ETFs, then we do have these two ETFs available on our Syfe Select custom. So do check them out. And if you want, then you can create your own crypto related portfolio through our platform too. And in general, as I covered earlier as well, there are some key risks that you should be aware of and be cognizant of as you're investing into the cryptocurrencies. Regulatory being a topmost priority. Do your due diligence when it comes to, like, what crypto exchanges are you using when you are trying to invest in. And as Ross covered, again, there are some aspects which are covered and regulated through, say, in Singapore, through the PSA license and stuff like that. But broadly, I would say cryptocurrencies, operate for retail investors in a broadly unregulated way. And if you kind of, like, from a security standpoint, lose money, there is no sort of, like, direct legal recourse at this point of time for you to recover, right? Like, there have been some exchanges who have compensated back some of their clients because of these security breaches and all. But if there are other reasons because of which you sort of have a security breach and you lose your access to your coins, that could be pretty bad, and there would be very little that regulator could do in that case. We covered from a volatility standpoint as well, why you should be conscious about it, as well as from an ESG standpoint. This is a debated topic. Like, more and more mining is projected to happen through the renewable sources as we move forward. But in the current context, still a decent portion of the mining of these coins are done through the traditional sources. So that can have a negative ESG impact as well. So these are, again, some risks and issues that you should be conscious about before you venture into cryptocurrencies and digital assets. All right, we'll maybe close with one last poll, because we talked so much about volatility of cryptocurrencies. Let's see how people think about volatility of cryptocurrencies and if they are ready to accept it, or they're not yet there. All right, Vivian, shall we see the results? All right, so very interesting. So, I mean, definitely, I think a lot of people would be concerned about the about the volatility of cryptocurrencies, but I'm also, noticing that a lot of people have started to learn and understand it better and then kind of live with it as well. So maybe we take a pause here and take a few questions, conscious that we are at 8 p.m. So let's take a few questions, maybe like, Ross,
Sure.
Those will come in more directed to you.
Sure, no problem.
But maybe Wilson, take a couple of questions to begin with.
I think we can just start off with just one question over here, right? So we noticed that there's so many different types of cryptos available in the market. So, as investors, how should they be picking one, or, should they just stick with Bitcoin since it's the largest and the most, famous one?
Yeah. Excellent question. So people often ask me that question as well. And I often relate it this way, right? You go to any shopping complex, you will find 10 different brands of Maggi Mee packet, right? And how do you know which one? You want the Korean one, you want the Japanese one, you want the local one? Which one do you choose? So you choose based on your appetite, you choose based on your own, you set a standard for yourself. Do you want the higher risk coins? Those are the altcoins. Do you want exposure to more volatility? Then you go for that. If you want to go with the sort of like quote unquote blue chip version of crypto, then you go to the lower risk, the more the Bitcoin, the Ethereum, and the ones which people are more often that have a longer track record in the market. So at the end of the day, I'm not gonna, because I know this question usually comes when people ask me, hey Ross, what coin you like to buy? I don't tell people that. I tell people, what is your level of risk that you are willing to accept? And if you're a high risk person, then you have an appetite for higher risk tokens. If you're a low risk person, then go with the tokens that have a longer track record. So for example, at Luno, we just offer 5, Bitcoin, Ethereum, XRP, Bitcoin Cash, Litecoin, and also, sorry, 6, we have 6 in Singapore, which is USDC. We offer those 6 because those have a long track record. They're a lot easier for people and beginners to start with. And so that's how I usually approach this kind of question, look at the supply and demand of the token, look at how long the token has been involved, look at how many people are also investing in that token, and then make your decisions from there. That's a kind of question that can take a 1-hour webinar just to talk about doing your own research, but in very short, I think that's what I would say. Yeah.
I mean, definitely definitely thank you for the answering, right? And definitely it was a good analogy for clients or viewers to actually understand what and how to pick it. So maybe one more question for Ritesh, right?
Sure.
So, one client is asking is that, what would be Scythe doing to allow, clients to get exposure to cryptos, maybe in terms of coins or portfolios or anything?
Right, great question. So look, I think in general, as I mentioned earlier, cryptocurrencies and digital assets are a very promising asset class. It is still in an evolution stage. We as a digital wealth manager are committed, again, from a long-term standpoint, making sure you get your core investments right. And from that perspective, we will keep on concentrating on having the more traditional asset classes representing most of your investment portfolios. Now, when it comes to cryptocurrencies, we are looking at it a little bit more closely, trying to understand it better. At this point of time, again, the exposure to these digital assets can be done through alternative means via ETFs, through our platform or through brokerage platforms as well. So in terms of overall asset allocation, we still believe it is at a stage where we cannot be 100% sure to give a proper answer in terms of how much you should be allocating. But again, I have seen mostly people, and it was also prominently put into the poll as well. Most of the people have less than 5% exposure to cryptocurrencies at this point of time. If you think of your overall core and satellite, usually 70% plus should be in a core strategy, and around 20-30% should be in the satellite. And within satellite, then there are all of these options available. So at this point of time, I would say evaluate all of these aspects and see how you want to go about investing into them. On our side, we are still in the midst of understanding this asset class ourselves. And with time, I'm sure there'll be a way for people to get these exposures through the Scythe platform too.
All right. Thank you, Ritesh. Ritesh, do you want to continue covering the slides?
I think we can skip the rest of the parts because we covered most of the top things that we wanted to. Okay, so sure. If you have maybe one more question, we can use that to wrap it up.
Okay, how about this? Ross, for yourself, how would you give your last or best advice to the viewers over here?
Yeah, so I think my best advice would be, I come from a person who was a skeptic. I'm not the kind of Bitcoin preacher, talk about Bitcoin. I used to be a skeptic, and I did my research and my opinion changed. And so actually when I saw the polls, I can see from the polls that a majority of you listening are already interested in crypto. You're already mostly investing in crypto. There's a small percentage, of course, you're not sure, you're on the fence. So my words right now is those of you who are on the fence. When you're on the fence, it means you're one leg here, you don't know where to stand. And that's okay, that's fine, don't worry about that. But the moment you make an effort to do more research, the moment you understand better, then you will slowly swing your leg over to one side and you'll be able to stand properly on one area that you're interested in. And so I was like that. I was on the skeptic side, I stood on the fence, and then I stood on the Bitcoin side and I said, you know what, this is an investment that I think has value in the future based on my research, based on what I've done. And so I always tell people, just give it a try. If you haven't tried already, just give it a try and then see the world change before your eyes. I know it sounds so idealistic, right? It sounds so idealistic, but whenever I talk about crypto and Bitcoin, one of the things that I always share with people, I saw this quote on Twitter, it's like, owning Bitcoin is like unconfiscatable wealth. It is a currency that was created peer-to-peer that no government can take from you, no country can take from you. It is something that you can own and hold and call yourself. And I think for me, that has been very valuable. So I hope you find value in that too. Yeah.
All right, awesome. All right, thank you everyone for joining us. So just one last part, if you guys those who have joined us, right? You can actually get, if you're interested in Luno, please actually you can get a $20 worth of Bitcoin voucher. Bitcoin when you do a $100 crypto on Luno itself. So you just have to enter the promo code, which is Syfe 13Gen in the Luno app to be eligible for this promotion. So the promotion is only for new customer, so it expires on 16 Jan 2022. All right, so if you got more questions, feel free to reach out to either Luno or Scythe itself. You can schedule a call with us and we'll be happy to actually help you on all this. If not, thank you for joining in tonight and have a good evening ahead.
Thank you, everybody. Thank you, Scythe. Thanks, guys. My pleasure. Hope to give another session in the future.